Okay, and we officially have started the session. Welcome in Sunday, August 17th, 2025. I'm your host, Gerardo G. Money Pies. And as always, right, these calls are not for educational purposes only. So any trade idea or suggestion is pure speculation. We all trade at our own risk, but make sure you know how to trade responsibly. Most importantly, right, do not trade any money you cannot afford to lose. No camera on today. I'm just going to focus on the education part of this. Yeah, so let's see what's in store today. I mean, there's been a lot of updates with the SMT indicator. I began messages from some of you guys that you're really liking this the indicator, what it's reading, myself as well. It's helping me read a lot. It's just helping me read the market. Um, you know, a lot better for opportunity. And also it communicates to me, kind of where we're at with the charts. But most importantly, right, it is telling me, kind of where momentum is going, guys, where momentum is going, and then when it's about to shift, right? So what caught our attention really was, I mean, this week, I think on Wednesday, I remember the indicator. Obviously it's known as structure, SMT, right? Structure, momentum, and timing. Timing is a very one of the very last things when it comes to the indicator, right? The SMT Ichimoku. And so the structure, let's play like this. The structure all another thing, all three of them have structure, momentum, timing. All three boxes have that, right? All of them do. Um, but all three together they're basically saying, okay, structure. What's inside the big box, right? The biggest box. Momentum, right, is basically your midlines or also the color of these front two boxes. Okay, these front two boxes. And at the same time, the timing, the timing, they all have a certain timing to it, right? We can we can kind of see the future of the structural momentum timing of the box, right? We can predict a future a shift. We can predict, a future support and so forth. Very similar to how the cloud is, right? That's what the cloud is. If you're familiar with the Ichimoku cloud, is exactly what it is. So here, what really caught our attention was, I believe, Wednesday night, right? Wednesday night, the 1 hour time frame is a good time frame to use. Let's see here, Wednesday night. Yeah, so we were here in class right here. Perfect. Okay. And I mean, the system was saying buys all the way. It got a little choppy here, right? It got a little choppy, but at the same time, it um it came into about 61% of this impulse of the NFP bullish impulse came about 61%. And this thing looked like it was going to go up, continue going upwards, right? Let me hide a few things. We don't need that. We don't need that. So this is where we were. This is how things were on the SMT, right? Okay. You fib or you measure from the lowest point to the highest point, and price came in, did a pullback, barely missed the 61% of this measurement, and then kind of found some strength to the top side. Now again, it was very, very choppy here. For the most part, Monday, Tuesday, even Wednesday. Wednesday started to kind of like finally expand. But the big box here, right? The big box is the only one that does not have that midpoint. The big box has the 23 percentile lines on both sides, or the 23% is very near the 78%. You guys see that? So that area right there is kind of like it's like a support and resistance. Okay, that level is a good supporting resistance on both sides, right? On both sides. And when I first learned how to use the Fib, guys, it was by my well, I'll call him my Fib mentor, right? Because he's the one that helped me understand the Fib. Mr. Curtis Cobain, I think I mentioned it before. He was part of another company that that's no longer around, and he's still trading. He's always mainly been a crypto guy, but really really good explaining the Fib. Very very good. And along with some additional reading. I think Miss Broder, I think that's her last name. They call her the queen of the Fibonacci queen. She's also very good. Obviously she's a little bit more old school and uses the old school charts and just the old school markups. And I picked up a few things from there. But recently, right, it's just one of the things that Marcus and I we always talked about with the market is fractal, right? It repeats itself over and over and over again, just in different scales. And this is how my mentor taught me, the Fib, right? And in the long and short to it, there's always a swing, right? There's always a swing. So a swing basically is a big push up and they pull back, right? That's a swing. Okay, that's a swing right here. Okay, we cannot call just one push up a swing, right? That's an impulse, right? So this is an impulse. This is a swing because we got the high, we got the low, we got the high, the higher low, and then from there, we can measure the that impulse or that swing, excuse me, correctly. Let me do erase this. I do want to take a moment on this. That's actually it's a good distinction to understand. So this is just an impulse, right? And all these are going to be bullish examples. These are just all impulses on the left hand side. That's an impulse. We'll put this here, an impulse or strong move. Impulse or strong bullish move. Okay. This right here is a bullish swing. Okay. Because, and again, it makes sense, right? So it's a swing, a swing, right? So we can't do much with an impulse. We can't use the Fib with an impulse. We let's know it's bullish, but we can't do much to it. Okay. So this is a bullish swing here. All right. So technically, thank you, Dr. Juice. Impulse. Oops, cannot. I'm looking at your. You know what it is? There it goes. The capitalization. Just write it in all caps. Just like that. Okay. Perfect. And there's a bullish swing, right? Bullish swing. So, but here's one thing, right? The market is fractal. So, in theory, right? Let's say that whenever we measure low to high on a bullish swing, we're always going to get a reaction at 61%. Okay. Or, let's do this. We are always going to get a reaction, a bullish reaction, right? At 61%. That's going to happen all the time. So this is the golden zone. Right? I think I have it right here. 50s, yeah, there he goes. 50, 61, 8%. We make the font a little bit bigger. There it is. Nice. Right there. Okay. Hopefully you guys can see that. Just cut a little bit darker. keep it. All right, there it is. Okay. So, but here's the thing, guys, right? This is kind of where the um, Curtis Cobain taught, taught me or helped me see the both sides of this. Okay. So if this is an impulse right here, guys, right? If this is an impulse or a strong move, once this strong move is finished, right? What comes next? The retracement. Okay. So no strong move can continue on forever. Okay. So a retracement comes back or a pullback comes back. Okay. So this is a bullish swing, but technically, guys, that right there, okay, is also known as an impulse or a strong move in the opposite direction. It could be the start, right? It could be the start of a bearish swing, correct? So if this is the start of a bearish swing, what comes next from here? A potential retracement or a pullback. Okay. So now the only difference now, and let me just do this so this is the high. And then this is a low. And then right here is what as of right now, right, is called a high or low. All right. But as I mentioned, this could be the start of a strong move down. Okay. It doesn't need to wait for any type of break of structures or anything like that. Just plain simple. This could be the start of a strong move down. So what he with Cobain taught me from here, right, or just remember what his lessons was that if he buys from 61%, let's say, strong reversal, yep. If he buys from 61%, 50, 61%, right, wherever his stop loss is at the low, he wants to go higher, right? He wants to go, 2 to 1 above the high. But he begins to take profit or takes partials, give or take around there. He was more of a swing trader. I remember that. And based on this, can anybody tell me why he's taking partials around there? He called this is the he's always thinking the devil's advocate. I have no idea what that means, to be honest. Dr. Latrice, what are you doing? You're not a fib girl. You get all the answers correct today. But no, again, the 23% comes from me. Remember that, guys. So this is what's it called? So the way what he did was, he would put orders here, take partials here, then let the remainder run. But what he did, right, he called like a devil advocate move or something like that, as we mentioned. So then what he did was, okay, he'll measure from the high to the low, and what do we have right here? That is approximately the 50 and 61.8% of that zone, where according to the rule, right, that is a potential area where the sellers could step in, correct? 52, 61.8%. Because if this thing does decide to continue going lower or reverse, that's kind of where the pullback would finish, and then it'll come lower in the other direction. Make sense? So because we've been using the fib a lot, we've been using that 23% a lot. We technically do not need a too many fibs in the same time frame. Okay. Now, I was gonna say we don't need too many fibs, but I need about 3 or 4 fibs, but all on different scales, right? But on one scale, on one time frame, we can technically just work with one fib. And it all starts by identifying the impulse or the strong move. This could be also a candle, like a strong candlestick, right? This can also be a strong candlestick. So, and here it is. Look at that, guys. What's right there? The 23% that Dr. Latrice just mentioned. So there goes the impulse. There goes the retracement. Your entries are around 50, 61%, or anything lower is fine, right? We strategize to where we start taking profit here. And what do we normally say? Price, if it establishes itself above, we're going to go to the extension. If for whatever reason the sellers step in right there at the 23%, okay, we're going to go a little bit lower and then a little bit lower, and then we read the price action as we go. Okay. So, long story short, right, I was able to connect what my mentor taught me into just one fib, right? Into just one fib. And then from there, use momentum to kind of like map the trade out. Okay. Excuse me, move with the fib levels. Move with the fib levels. Let me share this chart with you guys here. It's a good example there. Copy image. And the same thing works in the opposite direction. I was reading a book yesterday, Harmonic Trading. When my brother was looking at charts, he got into the harmonic patterns, and the images were there of the harmonics. I'm like, oh, and again though, it's like the harmonics, they actually use 4 fibs on one time frame. Yeah, so it doesn't have to be all like, and again though, the harmonic is actually a Fibonacci retracement tool. If you guys didn't know that. Okay, hold on real quick. Yeah, so like if I were to, let me just make sure. Yeah, it's all on. So if I were to copy this same swing of things, we can erase this, we can erase that. Let me bring on my harmonic. So this is a low to high. And you see a little number on the right hand side? That's the fib. Let me make it bigger for you guys. Okay, we can erase this. You guys know how to read the swings. Perfect. Okay. So if we get the harmonic from swing low to swing high, so that's your X, that's your A. See the fib, the fib, the fib, the fib, the fib. There it is. Right there. 618. If I have a steady hand. Okay. And then if I raise it up, raise it up, raise it up, raise it up, raise it up. Okay. Remember how the inverse of it was about 61%? And there it is. And then you go down. And then here, the middle number, that is your 78% down there. Let me put it here, the 88%, just to show this example. There it is, guys. Give or take. You guys see that? So that's all a harmonics is. You got your X, you got your A, you got your pullback, which is 61.8%. Okay. And then you got from your B to C, here it says 61.8%. Because why? Because it's measured from this high, right, to this swing like that, and that's 61.8. And then from C to D, that's this number, 88%. All of this right here is just an extension. It's just an extension from this swing. That's all it is. I don't even know Dr. Cheese. There's like 10 different types of harmonics, to be honest. There's about 10 of them. There's a butterfly, there's a bat, there's a deep bat, there's the Gartley, of course. There is the cipher, there's the sharks. I have no, I mean, I all the mathematical stuff is important. It really, really is. But again, though, right? It's yeah, it's really, really nice. It's nice to know those numbers, right? Just to have them in your repertoire, right? It's like having fancy vocabulary, right? Again, it's really nice. We're eloquently speaking, right? Um, and for the most part, the education is more being able to communicate and understand. I think if somebody wants to take it to that extra level, I think that's where we read books of the old stuff, um, the harmonic, the harmonic patterns, the Elliott waves, the Richard Wyckoff scenarios. I think we let those books teach us the things. But there it is, guys. That's the harmonic. That's the harmonic. So it's literally 4 or 5 fibs in here, right? 4 or 5 fibs in here. Um, so yeah, they're really very very nice to play use. I really do like them. Um, and we'll keep them as simple as possible. Perfect. Yes, shapes are nice. Math, shapes, geometry, um, all that stuff is very nice. So here, right? We'll be continuing the harmonic here review in a minute on this, on what I think can happen. But again, the right technical analysis is basically reading patterns. Okay, and there's infinite patterns as well in this trading chart. If there are like 10 harmonics in there, guys, if there's 10 different harmonics, let me let me let me do this, okay, just for us. Um, this I believe, give or take, right? That is like a Gartley. Okay. The next one here, I believe this is the like a butterfly. All right. And then I believe this is the bat. Okay. And then the next one over here, that's a shark. Uh, and I believe this one is like a deep crab, something like that. I mean, don't they all look similar in a way, right? I mean, they all kind of look similar. And I know you guys caught it, but I wasn't asking the question. What is it, Dr. Latrice? Look, all they are is M's. That's all they are, guys. They're M's. That's all they are. They're just different types of M's, right? Just based on how high it goes. And if you really want to get fancy, okay. I mean, like, if you really look at this, guys, what happened on this one? Based on smart money concepts, for those of y'all who study smart money concepts or know about the smart money concepts, what happened? What does the shark do? Based on, it's not the exact measurements, right? But what does the shark do? M&M's. Keston. What does the shark do based on ICT SMC concepts? If this was the swing, what did the shark just do? Grabs liquidity from the top, the buy side liquidity. I think that's the sell side liquidity, and the buy side liquidity. It just grabs liquidity from both sides, right? And there goes your shark pattern. Hey, it's fitting to the right. It's a shark pattern. Grabs liquidity, takes your money. But again, the right, it's like when we're training our eye, when we're training our eye, Um, I just actually this is a very good example here, guys. Very good example. We can use this on how it's all what you really want to see, guys. All right, it really is. All right. So this is what is known as a shark pattern, right? Like that. Shark. I only train my eyes to look for an impulse. Correct? What do you do when you have an impulse? What comes next? You measure it from the lowest point to the highest point. You fib it. There you go, KG, right? This move down is the pullback. In this scenario, it touched 38%. And then what happened afterwards? Price went up. It established itself above 23%, right? And then where it went, and then it goes to the extension, which is our take profit. Okay. So then once it takes profit, we regroup. So then once we regroup, we'll call this we would call yeah. So this is the impulse, this is the correction, 38% proper retracement, and then you push it to the top side. It hits the 272, and when we readjust our fib, right, based on that movement. So then here, right, we'll fib from this low to that high. And then for us here, right, we will determine here of the 23%. When it comes here and it retests, if it can't break it, well, then we'll potentially start trading back down to the 50, maybe 61.8%. We'll start looking for buys there. And if price doesn't want to buy there, we know it's going to go at least back down to the 1, get that low. And then, you can also use the extension in the opposite direction and then trade towards it. And then from there it goes. All right, guys. So again, though, it's like for the most part, I am just focusing on where's the strong move. Where's the strong move? Use that strong move and then use the fib to guide you. Yes, complete the pattern, right? We're trying to complete a pattern or we're trading a completed pattern. And then to answer your question, Dr. Treese, absolutely. Yes, this is a bullish shark pattern. This is a bullish shark pattern that grabs liquidity on from X to A. And then if you fib, I believe there it goes. Yep. If you just fib from X to A, you literally buy an extension below the 1. Let me just put these back on here. So that is a C. Yeah, so C, X, A, B, C, and then D. Right? So when the pattern completes, we're looking to buy from the extension. We're looking to buy from the extension on this scenario. Yep, there you go, KG. On harmonics, everything is connected to a fib. Yes. The harmonics are, like I mentioned earlier, they're 4 fibs, right? C could be TP. Yeah. On this one, yeah. So technically, the harmonics have 3 take profits. If we would enter from here, okay, the first take profit is actually at the B point. Okay. The second take profit is at I believe it depends on the harmonic too, right? It could be like kind of halfway. So this will be TP1, it'll be TP2, and then the entire direction, the entire completion will be that. Okay. Will be that right there. And yeah, like I think your statement is valid, KG, because um the fib is You know, the Fibonacci sequence is the universal sequence. You know, that stuff you can just read on your own on how that pattern works. But yeah, it's connected to a lot of stuff in nature, geometry, the pyramids, everything, right? Just how that number just works, finds a way to work itself. Okay. So this box here, right? Back to the box here. We all know that this top line over here is that 23 percentile, right? Let's measure that movement from low to high. We had the big impulse at the swing back to 61.8%, right? And then it's working its way back up to 38. And we were going to find some resistance at that 23%. Okay. So, but this is the interesting and the advanced part and the beautiful part about the box, that we can know the future of the box, correct? And this is communicating to us back here at the edge, right? So currently, the box is blue because it's is latched onto this lowest point and to that highest point right there. So so this is the frame, right? The frame of things. If I do this, and then I color this box blue, we no longer have that middle point, right? But it's still there. There it is, guys. Okay. So after these candlesticks begin to expire, this box will also go up. So if you see closely, and again, we know how much time it's going to be, right? It's got 1, 2, 3, 4, 5, 6. The biggest shift will be when we get when this candlestick expires, that NFP news candlestick. That's when we get the biggest shift. Okay. So we know the future of like, okay, we have 1, 2, 3, 4, 5 more hours of when it's going to happen. We also too can predict like, okay, in 5 hours from now, we're going to get rid of this candlestick, and this low of this candle is gone. So where's the next low? Well, you scan, okay, that's the low at the lowest. That will be the lowest right there. So then technically, right, in 5 hours time, the box will do this, correct? No matter what happens here, unless we get a huge spike, the information in the front is going to stay the same, correct? So we can see the future of the box now. We can see the future of momentum. We can see the future of structure based on this frame. And then so check this out. So because the box did this, now that's the highest point. Now this is the lowest point. And technically we're like that. So the box is no longer blue. What is it? Bearish now in my colors, or pink. And yes, Joe, it made a bigger drop than we had anticipated. For starters, excuse me, we were already near that 23%, right? Of the bullish impulse. And now we're at 50% of the future retracement impulse scenario. Now see that? Okay, box shifting forward. I have this lined up perfectly. There it is. Okay. So actually, so let me back up a little bit. So at a glance, right? At a glance, before this evening class was, my speculation was this, guys. Get above 23% and let's go. Right? Let's go. Because I did expect this to shift up. But I did not take into account what color the structure will be when that shift happened. And it was bearish now. That's what I was kind of speculating Wednesday afternoon. But Wednesday evening, we went into more detail and like, wait, the momentum's going to, the structure is going to shift bearish based on the frame. All right, so here it is. See, the box here is going to go up the next three candlesticks. It shifts up a little bit, shifts up. It's about to get rid of the little one. And boom, there it is, guys. Now it's shifted. Now the momentum shifted. Yes, we missed the the best entry, the best high low entry would have been from up here, correct? Right there. Would you guys agree that would have been the best entry, right? However, when price was there, we were still in a bullish frame. The 5 minute was bullish, the 2 minute was bullish. There's no way I'm trading that, guys. So let's see what happens. So let's focus from the red arrow to the right hand side. Okay, candles is this, is that. I mean, look, we missed another drop right there. We missed that drop too. But it's fine. Let the buyers present themselves. Look what happens here, guys. Let me go ahead and hide the indicator. Yes, that would have been the Instagram entry. This would have been the second best entry, right? But look what it comes back over here. Nice pullback. Nice pullback right there. BC candlestick. If you use the midpoints, it came back and touched the midpoint of the smaller box. Let's see what happens next. And there it goes, back down. So again, this happened around 2 o'clock in the morning. 7 a.m. price action was not the best. And let's just see how that ended. And that's how we ended. That's how we ended the week. Everybody follow along? Pretty good? Good stuff, right? When it comes to just kind of keeping things in frame. And so forth. All right, perfect. Now, I think KG, like on Sunday, I'm gonna say on Friday, we were looking for the buy, there was just no volume. Any sales from the top, they would have been nice, but there was just no volume. How do we know there was gonna be no volume? We don't know. Yes, sir. Joe's asking, can you explain again what makes the 2, 5, 1 hour indicator boxes bearish or bullish? Yep. Yeah, so it's that one, Joe, is connected to the small and the medium box. Okay. And it's the midpoint of each. There may be a glitch when you go to a different time frames, right? But and sometimes it doesn't update immediately. But it's the connect. So think of the small box and the medium box as the cloud. Okay. This is the what is it? What is it? TK, the Tinkinson. And then this is I forgot their names, TK, the Kijinson, the conversion and the baseline. And all we got to worry about is the midline. So when the small midline is below the medium midline, it'll be bearish. So in this scenario, right, on the 1 hour time frame, there goes the midline of the small box, there goes the midline of the medium box, 1 hour bearish. Let's go to the 5 minute chart. See how it reset it? It just because it's trying to collect so much data that sometimes it's off by the time. So on the 5 minute, but if you go back to the hour, yeah, see, it just don't rely on it too much from there Yeah. But on the 5 minute chart, the 1 hour will be consistent, but the 2 and the 5 minute chart are the ones that will glitch up a little bit when you're too high of a time frame. So we go to the 5 minute chart. The small mid is just slightly above the medium mid. Okay, and therefore that's why it's bullish. 2 minute should be consistent there. Yeah. 2 minute, the small mid is the small mid is below that one, and therefore it's bearish. Okay. So that's what makes it will make these two front boxes bullish or bearish. So that's the momentum. That's the momentum.
So when it's like that, you got the small box, the 17 box. Okay, so that turned blue, but your overall box, is reading from top to bottom, right, from high to low. So you still looking for bearish sales. Am I correct?
The big
Or,
you talking
or
about the big you talking about the big box, right, Ron?
Yeah, yeah. So you got you. It's still showing bearish, but what it's showing is it's getting ready to change. That's what you should be aware of. That it's getting ready to change. When that 17 box, say it turned blue. Say it turns green and it's above the 52 box. But the overall picture is bullish. I mean, not bullish, but bearish.
Good
So
point
what?
there. Good point there, Ron. So the big box is basically where we line up our fib.
Okay, okay, got you.
That's the big box guides your fib, especially on the five, well, even on the 5 minutes, put on the 5 minute. The big box guides your fib, like so, right?
Right, right, right.
And then from there, the momentum, because again, though, right? The momentum will then tell us, okay, do we continue looking for the sells to the extension, right?
Mm-hmm.
Or if the momentum shifts, do we start trading back to the here, or just let price get to there so then we can sell from the
Okay,
proper
got you.
areas, right? So the big box, and again, thanks, Joe. The big box is just basically it's what aligns our fib,
Mm-hmm.
aligns our fib, and we
Okay.
keep it in the same direction. We don't got to do multi fibs here because we know how price likes to bounce and use the 23% in there. And yeah, a good example of this, I think it did happen on one session. It's live chart now. Are we live? Is it live? Oh my goodness. Yeah, it is live. A good example of this happened on this choppy week, the week prior. Where was it at? I think it was on Tuesday. Let's say, yeah, right here. I believe it was right here. Yeah, that was Wednesday. Let's go for Wednesday, 8 o'clock in the morning. Perfect, right here. Okay. So Wednesday, that was not it. It was probably Tuesday. Where was that choppy week, guys? Oh, it was way over here. Yeah, yeah. Oh, last week was choppy too. Oh, there it is. Perfect. So, like, kind of back to your question here, Ron, right? So,
Okay.
see, the big box is bearish, right? So that's where
Right, right.
that's where we line up the fib right there. Okay. And actually, let me put in here the most updated SMT box. I don't on this chart. I don't have it. But let's go ahead and do that. Update. Perfect. See, and I added the extensions there, the extended lines to line up the 23%. So here, right, let's just put it like this. I was gonna say we look for sales, but yeah, we do start looking for sales. But most importantly, even before that, we line up our fib
Right.
bearish. That's
Mm-hmm.
what the big box is telling us. We line up our fib bearish. And
Mm-hmm.
our goal is to try to get down here,
Okay.
if all possible. So, but if price stays below this 23 percentile line,
Mm-hmm.
okay, the sellers are strong. If it goes and And this is kind of where the medium box comes in. Remember, all these lines too, if this 23 percentile line behaves like support and resistance, these midlines, they also behave like support and resistance, right?
Right. Okay.
So if price goes very strong, that's kind of what we look for the sell right here at the
Mm-hmm.
midpoint of the medium box, right? And I believe, see, price got there very fast. And I think we got a small reaction. No, we didn't get a reaction now that I remember. We see where you were getting a reaction. So at the next stopping point, because even though everything is red, right? It's going through the process of a pullback. It's going through the process of a pullback. In this scenario, we have impulse, and this is going through a process of a pullback. It can go as high as there. All right, and let's see what happens. And it does. But as price is moving, what happened to the box in the 5 minute chart? It turned bullish
It turned blue. Yeah.
because of the alignment of these lines, of these midlines. But why is this one red? Why is the medium one still red? Well, the medium one is
It's
still
below the
red.
50 or
Yeah,
below the 50 on the
correct.
big bar.
Exactly. But the momentum is strong. Let's see what happens here. Boom. Look at that. And then we got the pullback back in there. We got the strength back up there. And now it's gray, right? Because there's the stain. But you know, that's how it reversed on us.
Gotcha. Man, that's cool.
And at the same time, to look at here, guys, I'm glad you were able to follow all that through, Mr. Runks. It looks like you're picking up very well. Pip smooth percentile. Let's turn that off and let's turn that off just so you can have better visual. Okay. That same fib that we drew from earlier, right? I mean, I know the frame did change, but look, it did respect that extension.
Mhm.
It did respect that extension as well. So yeah, it's a good system to keep us in frame, right? And then from there, we can use the momentum to trade. So yeah, let's see what we got here. Okay, let's see what we got here to close out the speculation. I'm gonna try something here, guys. I'm trying to kill two birds with one stone. I'm gonna hit record here on the publish because I want to record my weekly outlook on in trading view, and then from there it can be posted. So let's see how it works. I was thinking about this yesterday. So we'll continue the recording there. Let's see how it goes here. Record video. Cool. All right, perfect, guys. So this will be the weekly outlook from Sunday, August 17th. Let me check the date here. Actually, so technically it's the weekly outlook from the trading week of August 18th through the 22nd. Okay. This is Gerardo G. Money Pies. And as always, right, this is for educational purposes only. So yeah, let's get started here with what gold is doing. Gold last week actually had a very strong bearish candle close. So we're going to keep it very simple. We're going to take the previous weekly high, and then we're going to take the previous weekly low, as so. And we mark up these zones right here. The open is way over there, so it was very a lot of strong sellers. These opens here are still kind of valid. They are catching my attention. We'll come back to them if we need to, but for the most part, right there goes the range that I like to always measure, right? For the most part, right? If it's speculation is where is price going, so it's either going to go to about a pullback there and then down, or it will just retrace deeper, right? And then I do this week by week, week by week. So the 4 hour time frame. Once we get that markup, we immediately go to the 4 hour time frame, and then from here I'll turn on. I'll start measuring that high to low with the fib, and there we are, guys. Okay, there we are. So as long as we remain between below that 23%, I think we're going to remain bearish. Okay, that's the 23 percentile line right here for the previous week. Okay, that's so. So as long as we remain there, okay, we're bearish. Now again, these extensions below, they're potential targets like that. Let me add in here the 382. I think gold is gonna be a little bit aggressive this week. There it is. Okay, so that's a potential target for us to take. How many pips is that? The negative 18 is about 180, 250, about 330 pips to the downside. So I do like that. We also have a complementing rally-based rally kind of waiting right there. So I also like that as well. Okay. In today's session, we actually covered harmonic patterns. I see a harmonic pattern here building up. We'll start it from the 1 hour time frame. Actually, it's not there. We'll keep it on the 4. Okay, so we're either completing a pattern or we're trading a pattern, right? So here, right, this is what I see, guys. This is the low. That's an impulse. That's a retracement. Okay, that's an impulse, and I think it's gonna try to do that. You guys see that? This is what I'm looking for right here. What pattern is this? I mean, we just for the most part trade our movement because again, we could use this low as uh the low and not this one. But again, the most important thing though, right, is that we can see a pattern completing itself all the way to the D point. And I would like to buy from the D point, right? Like a backward shark. That's what the tree says. um, yeah. So regardless, this is a good area point of interest for us to potentially, position ourselves for a good long. And if you see the impulse from the bottom and just measure everything, that is a 78% retracement. So it's kind of like this. This is the impulse, deep institutional retracement, TP1 right there. It could go all the way up there. All right. But that's honestly, this is what I'm looking for, guys. I think intraday would trade a few days, Monday through Wednesday, sells. Once we get here, I think we position ourselves for that buy to Dubai. Okay, that buy to Dubai. So I like this. I really do like this, especially this here. Let's go to the 1 hour time frame. And I have a momentum system that I use, and we're still bearish. We're still bearish on it. So it looks promising to continue going lower. Let me just check if there's any ETM candlesticks along the way that could also help us with this direction. We do got a drop-based drop here. So for whatever reason, prices want to go a little bit higher, touch the 23% again. We do have this drop-based drop on the 8 hour. Kind of fill in some gaps there if we need to. It's not bad. Back there goes to 4 hour harmonic, 2 hour. Yeah, nice little morning, evening star there, talking to the trees right here. Maybe come back and retest that if it really wants to, but if not, I think it's on its way down. Okay, I think it's on its way down. But this is what I like: the sell to buy scenario for gold. Okay, so again, thanks for tuning in. Hopefully, this is a chart that helps you guys. And any questions, always feel free to let me know. Thank you. Have a good one. All right, perfect, guys. 2-1. All right, perfect, guys. So this will be that was the recording for that, y'all. 1 sec. Again, this is a trial, right? This is a trial first. I think I do got to continue publishing. Yeah, I do. I wasn't technically ending our class, Dr. Latrice. I was ending this recording here for this. Let me just see. I did hit. Don't tell me that didn't. I did hit continue publishing, right? Oh, if not, I got this recording. I'll chop it up, and then don't tell me that did they not record this thing. Tell me technology. Yeah, I'll post a pic for sure. This thing. Tell me it's technology. See, we gotta check that out. Anyways, yeah, let me share this with you guys. That's that. Link and image. Why didn't it post? Maybe because I'm recording with Zoom. That's probably what it's doing. But that's interesting. All right, well, that's the outlook for gold. Good markup. I think we tied in the education pretty well with the harmonics as well. And yeah, so I still like the sales. I like the sales towards 3306 almost. I think once we get to this 4 hour rally based rally, I really would like to see us buy from right there. Okay, I really like to see us buy from right there. That's the area for me to position ourselves, and we'll see if it plays out. But other than that, we'll stay connected to the charts, and we will see how this one plays out intraday. Okay. And I will close it out, and we'll resume any updates or anything. I'll make sure I'll update the Discord. But yeah, we'll resume again English again Tuesday, and Monday I think I'm in Spanish. But all right, we'll
This
close.
is going to be recorded.
Yeah,
I'm in
yeah,
the
yeah.
first partner, so I'll be able to get this today, so I can.
Yeah. The Sunday ones they're recording. They're recording.
Okay, let me just ask you one final question. I'm just trying to get my mindset and my process on the last question that I asked you. So once that 17 box turned blue, my thought process is it to wait till that 52 follow and turns blue before I actually say I'm going for the buys?
Gotcha. Good question there. So, and this is the good example here, especially in this choppy price section. Let me turn on the rewind. The best confirmation would be when the on the 5 minute chart. Right? Let's just focus strictly on the 5 minute chart.
Yeah.
I would say this right here because we would have got caught. This is a good example here. Let me rewind right here. Actually, maybe just take it all the way to the low. All right, so at this point, right, we're still looking for sales at this point.
Right.
Everything is bearish. You fib it, and here goes the 23 percentile line. Even the small and the medium boxes are still, they're still bearish. So we're still looking for sales. Ideally, right, we can let price come in to touch the bottom 23 percentile or the red line. So as time moves on, okay, and see the red line actually catches up, shrinks down, okay, here. So see the momentum is starting to shift here. Here, I wouldn't say start buying yet.
Mm-hmm.
I would say let the prices and let the midlines get above
Okay,
that bottom
gotcha.
23.
Gotcha.
And we only take it about right here, Mr. Ron, right here, right?
Right,
Max,
gotcha. Got,
right?
I got
Because you know how those lines work, right? And so see, so it is blue, but you see you get this pullback here. We don't want that. So the moment those lines get above that 23 percentile, even right there, right? It was trying to push down. They said no. There you go. Now it's safer to buy.
Okay, gotcha.
Bullish box, they're slightly above there. Okay, we could potentially now buy.
So that red line is always going to be there on the 52 box. It doesn't change. Does that change?
It will change. It will change, right? And this red line is red again, like as you said earlier, because it's below
It's
this.
below the. Okay, gotcha, gotcha,
And
gotcha.
that's the reason why we can't take it higher because we know it's going to find resistance here, right? And but so yeah, so so there it goes. You see, pushes up, and it actually touched the 23% of the previous week, right? So this entire thing was more. It was so that was more of a bearish move, right? What we really want to focus on is on this move here, right? Where price completed a pullback. Now the box is bearish back down. Let the pullback finish, right? Yeah, it was obviously it did not close in the best example because the bigger box was just shifting blue and red. But that was more of a counter example what we just went
Hmm.
through. Let me just give you an actual trending example, and I think it's right here. Yeah. So here we're looking for sales. Okay, we want price to give us a nice pullback, at least back to the red line in
Hmm.
this scenario. So there it goes. There it goes. It touched the red line now. That's a good area to start selling. Okay. Stop loss there or stop loss up there. So, and actually, we fib this. Yeah, we can entry at the 50%, stop loss at the high line or stop loss at the actual high, and then we take it down to the extensions. Okay, so that's actually the moves. These are the moves that we want to see. Let the pullback happen. Let this happen. If this line remains red, we're still bearish.
Okay, gotcha.
See, and it turns
It
blue
changed.
here.
Right,
It turns
right.
blue. Here's a good example here. It turns blue. But because this line is still red, this is still just a pullback.
Gotcha, gotcha.
Okay. And then there
He
it
said,
goes.
there you go.
There it goes back down.
Wow, that's awesome, G.
Yeah, yeah, absolutely. Yeah, it's a great color coding system. It's just a lot of repetition in the eye in the explanations and a lot of repetition on the eyes. And again though, right? Like I know these moves like with these are the moves that we've always been trading, for years now. But now we have a system that kind of gives us the visual, right?
Mm-hmm.
That's gonna make it a lot easier for us to train our eyes. Like even myself now, I'm finding myself kind of like seeing the patterns play out a lot better, with confirmation. Like, okay, it's just a pullback for now. It's just a pullback simply because this line was still red. This line was still red. Don't let the momentum fake you out too much.
Right, right.
But again, it is a bullish momentum. It is a bullish momentum based on the position of those things. But don't let it fake you out too much because this little red line is still red,
Mm-hmm.
and it went
It
lower.
went down, yeah.
Mhm.
But you hear it long enough and you see it long enough, you'll start
Correct.
sinking in. That's what's beginning to happen to me now.
Yes.
I'm beginning to get the little small details, just a few things, but I'm getting the small details. I appreciate everything.
Oh yeah, my pleasure. My pleasure, guys. All righty. If there's no more questions, we can chop it up right here. And we'll continue on next week. Let's see. Oh, let me see. Yes, for sure, KG. Ethereum USD. Let's see. Which one do you follow more, Dr. P? Does it matter? Coinbase, Bitstamp.
It doesn't matter.
Okay, let's go to Coinbase then. All right,
I bought
so
I bought around 1,000.
okay, Dr. Latrice. Let's see.
Hey, that's a
One,
good move.
that's a very
That's a
good
good
move.
buy. Ethereum on the move.
Yeah, it's up over 4,500. So
Yeah. All right,
yeah.
so
And when I first bought Ethereum, it was $89.
Ooh, you still got it?
Yep. Yes, I do. Quite a few
Yeah,
of them.
I need to get more into these type of things, guys. Good, do like it. So I mean, I think Dr. G, this is going to continue going up, right? It just we're like in an area where it can potentially give us a strong pullback. So again, though, right? I think ultimately this will go up. We are going to get a lot of resistance simply because we're at that like all-time highs again. So a lot of
Mhm.
people will be, selling.
That's what
Uh,
I'm thinking.
a lot of people will be buying. We do have a nice little rally-based rally with two straight bullish weeks. I think, right? Like if we just take it back to the measurement of the fib, you can consider these the lows. This is the monthly chart, though, right?
Right.
Actually, hold on. So let's see, check this out here. It's interesting. There goes the impulse. There goes the hype, right? And then there goes the sell-off. People selling it came back 23% multiple times. Came back down to 61%. Got some support. Now we actually broke the 23%. So I'm not sure how much difference it makes on your chart, but I think it's going to find support again back around that 4,000 level. If that 4,000 level does not hold, I would say maybe, grabbing your profits will be good. But if it does hold, we can go all the way to 6,000. Is there any projection out there that is 6,000 or what is the
Mm,
fundamentals saying? Yeah, you guys know?
No, I just,
well,
periodically, it's the funny, the other day, somebody sent me a text about something, and I was like, you know what? I still have Ethereum in my MetaMask. And like, let me just go take a look. And I was like, oh my
Nice.
what a surprise, huh?
because periodically I pulled thousands out of this, and I'm
Okay.
like, I could just take I could take 1,000 and leave some money in there and see what else, because that's what I've been doing, kind of chopping it
Mm.
down, but I have more than gotten my money back. And so, but I was thinking I'll forget about it again. Maybe I should just pull the rest out and just move on to something else. So
Well,
that's all.
here's the Ethereum fib. I started from the monthly. Now I'm on the weekly chart. We do have a very nice BC right here, right at that
Yeah.
23 percentile. So if this 3,500, 4,000 level does hold, I mean you can potentially set it or keep it and forget it a little bit longer. But if this does not hold again, it's probably gonna give us a deeper pullback. But yeah, I mean that's not bad at all.
Okay.
That's not bad
Thank
at all.
you.
My
Thank you for
pleasure.
taking a look.
My pleasure. All right, yo. Well, we will, yeah, thanks, KG, for that. Yeah, the cut lines will help. Yeah, anything else will continue to improve the indicator, but I think it's in a good spot right now to test to continue on. Um, once the recording drops, you should if you're following YouTube, you should get the alert there. But thanks, guys. Have a great Sunday, and we will see you guys throughout the week and in the chats. Thanks. Bye.